Hello and welcome everyone to Silver Asset of the Day for the 12th of November 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head towards the end of the week here, what do you need to be aware of? Well, first of all, of course, in the middle of the week, we had the CPI data, the strongest reading since 1990, which effectively continues to show that inflation is not transitory at all. And with that, we saw a slingshot move higher on the dollar. As we talked you through on Tuesday, our expectation would be that we would see dollar strength into Wednesday's news item, the CPI reading, which is exactly what we saw, breaking out to 16-month highs. Now, this, of course, also had a knock-on effect with other commodities. We had platinum prices, they broke out over 3% to the upside. We also saw copper later on in the session on Thursday, that broke out 2% to the upside. Palladium broke out over 2%. Natural gas prices broke out 3%. Gold prices, of course, broke out 1%. Silver prices broke out 2.5%. So you get the overall picture here. Commodities absolutely took off to the upside. Now, as we mentioned to you on Tuesday, we locked in further profits on palladium for 1,000 points. We booked profits this week on gold as well, just scaling out of that position as we continue to ramp up a lot of profit on that trade. So again, 1,000 point book there on gold, and also booking 150 points earlier on this week on copper too. So of course, with those trades, booking over 2,000 points of profit for every one lot contract that you would be trading, that's $20,000 of profit. For every 10 lot contract that you'd be trading, that's over $20,000 of profit. So with that, where do we sit now as we go into Friday's session and as we head into next week as well? So bear in mind, we've got a public holiday on Thursday, which is the Veterans Day in the USA. So trading later on in the session was a little bit muted. It's actually quite common the day after a public holiday to get some profit taking and pressure on the metals. So I can't rule that out, that we may see a bit of profit taking given that we've seen such big moves to the upside. Now, I also mentioned to you on Tuesday's gold asset of the day that I'm looking for gold to break out at the beginning of the week. We absolutely, of course, saw that on the CPI data. We broke out towards the 1865 level. We're getting quite sticky around that level. You'll notice right now the price continues to consolidate around 1860. I'm watching this carefully into Friday's session to see if we can break out further or whether we're going to roll over within a bull trap, as I mentioned to you on Tuesday, that we could actually see prices get back below 1800 again in the following days. And I'm still not ruling that out, particularly as we head into the middle of November, and then as we get towards contract settlement, end of month profit taking, the Thanksgiving holidays. Often this time of year, once you get through to the middle of November onwards, it tends not to favour gold and silver. Now, obviously, we're capitalizing on these breakouts to the upside. We've even got a platinum position on right now, which is up over 1,400 points. And in fact, we've taken on 2 new positions on natural gas this week, which are currently up over 450 points. Now, as it refers back to silver right now, the gold-silver ratio is broken down to 1 week lows at the moment. Of course, the dollar index breaking out to 16-month highs is not having much impact on commodities right now. After the inflation reading, all commodities have tended to rally after that news item, including, of course, gold and silver. Silver's up 2.5% on Thursday, and of course, over the week, it's up by more than 4%. It continues to hold above $25 per ounce. Again, it looks solid right now. We've had a decent breakout to the upside so far over this week, following on from that CPI reading, but I can't rule out that we may again get a pullback as we go into next week and as we progress throughout the month of November, once we get closer to contract settlement and the Thanksgiving holidays as well. Typically, there is a better opportunity to buy in at lower prices. This, of course, comes down to utilizing a research-driven approach. You want to ditch those outdated technical analysis strategies and indicators which just do not work. If you're finding you're getting chopped up, it's probably because you are using technical analysis or outdated indicators which just are no longer relevant to these markets. Everybody starts off learning technical analysis. You absolutely have to evolve your trading beyond that. Trading technical analysis, we can compare it to martial arts. It's like getting your white belt. It's the first thing that everybody gets when they turn up to a class. However, you need to progress beyond that if you want to go through the different levels and get to your black belt. Don't be a white belt and only stick with technical analysis. You really need to progress to the next levels throughout your trading career. This, of course, is where you want to be utilizing research, data, market intelligence, statistics in the market. Alongside that, be aware of the daily, the weekly, the monthly, the quarterly cycles in the market. Marry that up with the intermarket correlations, the ratios in the market. Be aware of key areas of liquidity, sentiment in the market. Of course, the major news items that will have the biggest catalyst for large impulse moves where you can capitalize very quickly. And of course, be aware of how the hedge funds, money managers, banks and institutions are trading and positioned in the market. That will help you massively to get an edge. So with that, if you would like to learn the research-driven approach to the market, join our community of successful traders and learn our professional research-driven approach. There is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.